Good morning, good afternoon, good evening, depending on when and where you're viewing this. My name is Mike. I am the Crypto Liberal. Thanks for joining me again today. I have a big show planned, lots to cover. Even on my third day battling COVID here, I got my throat and chest lozenges. I'm feeling better than I was yesterday. Yesterday I was had chills and whatever, and I got my ibuprofen back there. I don't know if you can see that. I'm kind of shut in into our theater room, so I don't interact with the rest of the family. I walk around the house with a mask on, and I sound like crap, so I apologize. And if I cough during this, I apologize. But I wanted to do the big show before the weekend, before everybody shuts off the internets for the weekend. So I wanted to get it out today, even though I'm feeling a little down. But this is probably my most important video yet. So if you find any value in it, I would truly appreciate a like, a subscribe, and a follow. A bell. Hit the bell to follow. You get notifications when I'm posting new videos. Follow me on Twitter at crypto_liberal. I post more updates there than I do here. I generally do one video a day, sometimes two. But so I'd appreciate that. I love sharing this journey that I'm on, and hearing from some of the people that are watching the video, and interacting with you folks, and hearing your journey as well. So let's get into it, right? Let's. I've only been on this journey on YouTube, right? I've been in crypto for like almost 6 years maybe, but I only got in this journey on YouTube, about a month ago. And really, for the main immediate reason was to dispel the FUD that was going around, right? And so let's go back to that. Look at the chart today, where we're at. Right here, we're at. See that red line going down? I told you way back here on May 11th, before we even wicked below it, that this line existed and it would hold us as support. This was right in the middle of Terra Luna, the FUD of Terra Luna, and everybody's, scared and thinking we're going down to 20K, right? Well, let's watch the video. You don't believe me? Let's watch the video of that time I drew that line for the very first time. Here we go.
Here it is, right? Check out this red line I got going on here. I'm going to try to angle it here so we can get the glare off of there. Check out this red line I have on here. Going from right to left, right? So here's where we are today. That last red candle there is where we're at right now. And we're at 29,130 as I speak. But we're bumping right up against that red line, which is whatever. It's a red line. It's a random red line. That's why I'm not a big TA guy. But I had this line on here from a long time ago. I just went back in the charts today for some reason on Bitcoin just to check it out. See where we were at in relation to the past dumps that we had over the last year. And I found I had this red line, and I extended it out. And what do you know? We're bumping up against it today. So let's go back and see where this red line originates. So I have it going all the way back, right? Back. Goes well over a year that I had this red line on here. So going back to there, right? So really where I think it starts coming in is when we were making our first run up to 60, 64, 65,000, right back in, this is March 3rd. Hey, it's my birthday. That's nice. March 3rd. See, we bumped up against it right here, right? That green candle, red candle, bumped up, got rejected a little bit, went down, but we broke through it, right? We broke through it convincingly here, and we stayed above it for a little bit. Looks like maybe a month here. This is the daily. This is the daily chart on Bitcoin, right? So we stayed above it for a while until we got to here. We came back down and we tested that line perfectly on April 25th. Looks like, right? See? And actually, we can go back a little bit more. We tested it back here first on, looks like, March 25th. Man, it's my wife's birthday. Happy birthday, honey, if you're watching. Anyway, so we went down and tested March 25th, and then we went back up a little, served as support, and then we came back down and tested on April 25th of last year, right? Nice. And so this was after we had gone up to 65K. We came back down and tested it twice. We stayed above it for a while, but then we finally, right, over here in May of last year, we finally broke through it, went under, right? So we stayed under it for quite a while. That was a long slog, right? We went down to 28K down here at the bottom. We were down flirting with 30 for quite a while, but then we started coming up, right? And first time we tested this line on about July 31st, got rejected. Just a little bit of a rejection, but went down. And then again, above it, right? So then we stayed above it, but look at this. Stayed above it for a little bit, but look at it, come back down, wondering if it's going to hold. September 21st of last year held, and we hovered above it for a few days. It's like 7, 8 days, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 days. We kind of hovered on that line, testing it. Served as support, and then boom, all the way up to 69K, right? All the way up to 69K until now. We stayed above it for quite a while, but then came, look at, first real big dump after the 69K. All the way down here on January 22nd of this year. Tested it perfectly again. Yeah, you can't make this stuff up. Tested it perfectly. Right? So then, served as support. We had a couple months here where we went, it looked like maybe we were going to go back into a bull market from January to March, April, and then we started going back down again. But here we sit today, May 11th, right on that line. Here it is.
So, right? That's a good prediction so far. We nailed it so far. Like, let's look at the chart. Look how long we stayed on that line that I drew on May 11th, which is right here. This candle right there, May 11th. And that was before we wicked below it, right? See, we wicked below it after I put that video out, but we closed the daily above that line. And then the next day was really when the Terra Luna FUD hit. It went down to 25, but we closed above it. And then look at this. I think it was like 20 some days, 21, 22 days. We stayed on that line. How many times did we wick down to it, close just on top of it, wick down to it again? We stayed above that line. And then, what did I say? I gave you another prediction last Friday. I said, okay, this is it. That's about it. I gave you 7 reasons why you should be bullish immediately in crypto, in Bitcoin, Cardano, and Ethereum specifically. And I said, I gave you 7 reasons why we were going to pump before the market opened on Tuesday because it was Memorial Day. And just to cement that in, I gave you 8 reasons on Saturday. I added a reason. And then I gave you 9 reasons on Sunday that we were going to pump soon, in the immediate future. And in fact, one of the reasons was we were going to pump before Tuesday. So let's look at that video real quick. This one's shorter, I promise. But it's illustrative of what I'm trying to bring to this channel.
Right now is the divergence in the crypto market and the stock market. Crypto's got some catching up to do. Reason number 5 is on Friday, I showed you Coinbase and Voyager Digital, two stocks on the stock market which are correlated almost exactly to the crypto market because their crypto stocks or crypto exchanges went up 8% on Friday. Why did they go up for 8% on Friday? Does somebody know something? And the volume I showed you on Coinbase was like 50% higher than the average volume for the last 3 months. Somebody knows something. And why would they purchase it on Friday when there's a long weekend coming? Why would they take the chance if crypto's about to go down? Reason number 5 is that crypto stocks are going up. Right now. Here it is, right?
So there we are again, right? Another perfect prediction. I told you Friday that we were going to go up by Tuesday. And we pumped like 10% on Monday and going into Tuesday, right? And then yesterday, of course, we had a little bit of a crash. I won't even get. I'm not going to show you every single prediction I made that has been accurate. And I apologize. That video, I'm like, hey, I had a lot of enthusiasm going over the weekend, and today I just don't have it. I'm not feeling the greatest. But anyway, I think Monday or no, after we pumped on Tuesday, I said it was important to hold 31.3, or even before we exceeded 31.3. I got my video on Tuesday said we need to get above 31.3 and hold it. And that will, that'll be important to get to the next level, the next resistance. Well, we held it one day. Let's look at the chart real quick. So right here, right? I said on this day, before we even got to that level on Tuesday, which was May 30th, I said we need to hold the 31.3. And actually that was Monday, sorry. So it was Monday I said that. And then Tuesday opened, the crypto opened, and we kind of stayed steady. Look, we wicked down to that 31.3 level perfectly. Look at that. And then yesterday we didn't hold it, right? We didn't hold it. And as soon as we didn't hold the 31.3, we crashed down. But that's not the end of the story, right? And so I put out a video yesterday. I put out before the market closed for the crypto day, right? Before, the crypto market closed for the day on the daily chart. I said it was important to hold one specific level. But not only did Bitcoin crash or crypto crash yesterday, and it wasn't a crash, but it went down, the stock market went down. And I told you that the stock market going down didn't make sense to me. So let's watch that video from yesterday because it's important to get to where we're going. So let's go to that. So the video from yesterday, let's look at this one first.
Keep an eye on those for tomorrow. But the reason for the stock market crash, or not crash, it wasn't really a crash, but it going from up a percent or two down to down a percent, were really two things. And to me, they don't make neither one makes sense. First, let's look at this one. Jamie Dimon. Now, Jamie Dimon shouldn't have a job, in my opinion. Go watch The Big Short. Go read The Big Short. And none of those people from 2008 that were in charge of those banks back in that time frame, 2008, 2009, should have a job today. So, I mean, he came out and said, there's a hurricane on the horizon or something. I mean, it was at a investor conference, and he basically said the U.S. economy is facing a hurricane as the Federal Reserve continues its process of normalizing interest rates. Diamond said he previously referred to impending challenges facing the economy as storm clouds. And, quote, he said, right now it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We don't know if it's a minor one or Superstorm Sandy or Andrew or something like that. And you got to brace yourself. So, what does that mean, right? Really, in the end, what does that mean? The fact that Jamie Dimon, who should not have a job, none of those guys that were in charge of those banks back in 2008, 2009 should have a job. They should all have been fired. That should have been a requirement of the Fed bailing them out. That none of them, the whole executive team should have gone. And I worked at, one of those banks that got money back then, and it was not a good time to be at the banks, and anyway, so to me, he shouldn't have a job. None of those guys should have had a job, but he didn't say anything. I mean, so that's one reason I think the market went down a lot today, is because of those comments. But I think the bigger reason, if you look at the timing of the market downturn, was this other factor. So forget Jamie Dimon. I don't think that's really the reason the market went down. And if people are saying that, disregard that, because he didn't say anything. I mean, there's a hurricane out there somewhere. We don't know how bad it is. And I mean, speaking in metaphorically about things that he's not an expert on. He's not an expert on macroeconomic things, any more than you are. So disregard those comments. But the bigger factor, I think, is that is this the manufacturing activity remains resilient in May. So if you look at the timing of the market downturn, it kind of coincided with this announcement about or this communication about the manufacturing sector. So 2 readings on the U.S. manufacturing sector in May show continued growth amid investor concerns of an impending economic slowdown. The Institute for Supply Management Manufacturing, PMI, for May hit 561, which is up, or 56.1, which is up from 55.4 in April, and marking the 24th straight month of growth. The U.S. manufacturing PMI hit 57 in May, down from 59.2 in April. For both reports, any reading over 50 indicates expansion in the sector, while readings below 50 indicate contraction. The data wasn't all sunny, however, with the ISM's employment index showing an unexpected decline last month. Additionally, S&P's report showed business confidence falling to the lowest level since October. So, what does that mean, and why would that make the market go down? Usually, right, manufacturing doing well shows that the economy is doing well. And, we've talked about this repeatedly on the channel here, is when the whole macroeconomic environment right now is we need to get inflation under control, right? So anytime some economic news comes out that makes the economy seem stronger than normal, people, the bots and people start freaking out and selling because, well, if the economy's doing well, the Fed's just going to keep raising rates and there's no end in sight. And as I've said repeatedly on the channel, when the Fed raising rates and the economic downturn are going to reduce inflation, and there is light at the end of the tunnel, there is an end in sight. And so when the manufacturing comes out stronger, people freak out, right? Because the economy is stronger, and one of those 2 factors that I said is going to reduce inflation isn't there. But here's the thing, I'm certainly not an expert, but here's the thing that I don't understand, right? Is if manufacturing is stronger, meaning the manufacturing sector is doing well, and they're getting out the product, whatever they're making, right? The widgets that they're making, they're getting it out and making it, and they're getting stronger. But, in that little clip there, it said job growth is going down. The other, GDP is going down, and the Fed is raising rates, so people are spending less. To me, the manufacturing getting stronger indicates that the supply is there, right? Manufacturing getting stronger indicates the supply is there. The demand is slowing down. So in my rudimentary economic analysis, right, supply going up, demand going down, inflation coming down. So I think people and bots selling out because manufacturing is strong, and that means the economy is strong. That means the Fed's going to keep raising rates because inflation is going to keep going up. I think is just kind of people sold just based on the news and damn the consequences. But if you dig into it a little bit, to me, supply going up, demand going down, inflation will come down, Fed won't raise rates. So I think when people have an opportunity to digest that information and think about it, I think they'll realize that manufacturing going up is not a bad thing. It's not going to mean that inflation is going to keep going up if demand destruction remains the same, right? The economy's slowing down. They're going to continue to raise rates. And that's all demand destruction. They're trying to destroy the demand for product. But if the manufacturers continue to make that product, and in fact increasing that product, inflation will go down. Fed won't raise rates. So I think if people have an opportunity to think about the numbers and the consequences of those numbers, it's not as bad as people are making it out to be. So, So just to wrap this all up in a bow, right? I don't think the downturn today is going to continue. just my opinion, again, just my opinion. I think going into the rest of the end of the week here, 2 more days in the week, for the stock market at least, right? I think you're going to see some green, and the DXY start to come down again a little bit. I think crypto will follow that trend and continue up. But keep an eye on.
Okay, so how did that prediction work? Right? I told you yesterday, when after the market had gone down like percent, and the DXY, the dollar index, which I didn't cover in that video, part of the video, had gone up like 0.8%, which is a big move for the DXY. So I told you that trend wasn't going to continue. That the fact that the market went down because of Jamie Dimon, who again is not a macro expert. He's not. And those manufacturing numbers, it didn't make sense to me. So I said the stock market will turn green this week. So the DXY will go down. So how's my prediction turning out here? Let's look at the market today. Not closed yet, like a little over an hour. Look at this. Look at this. I think it takes a second yet. The NASDAQ is up 2.3. Dow up 0.8. S&P 1.3. It looks pretty good to me. How is that famous DXY doing? Look at that. Almost down to where it started. It's down 0.7. Not quite back to where it started yesterday, but it's going down. I told you. I told you that would happen. Right? I told you this would happen. I told you yesterday this would happen. That it going down yesterday was a mirage. It's trying to get people out. But that wasn't the only thing. I tied it into crypto in my video yesterday too. This is a shorter clip, so let's just watch that real quick. If I can get it to run here. Here we go.
Anyway, my point is if we finish above 29.4 today, my prediction, and I could be wrong. I'm just saying I've been wrong before, but I've been right more often than not on this channel. Finish above 29.4, which is where, go back to the daily here. We're at 29.7. Finish above 29.4. I think we're going to finish the week green. And that means, it could be only a $300, right now it would be a $300 difference. But I think we're going to go up. And I think we will continue to go up for a few weeks at least, if we can manage to finish this week green. Just my opinion.
So how did that prediction turn out? All right, let's look at the chart. Sorry. COVID kicking my butt. But look at yesterday we were at 29.7. We finished above 29.4, like I said. We wicked down to that 29.4 level right here. Actually, we wicked below it. We were at 29.2. But I said, important to finish above 29.4. We finished the day at about 29.7, which is when I was making that video, where I was making that video. And look at today, right? We're up at, we're at 30,000, almost 30,100. So I told you yesterday that the blip that we saw yesterday wasn't gonna continue. We were gonna go up. And I still insist that we're gonna go up by the end of the week here for both the stock market and crypto. So stock market only has one more day. But so that's kind of like the short term I wanted to talk about. I have a longer term, like a more intermediate term prediction for you. Stay tuned to the end of this episode. If you appreciate these accurate, spot on, perfect predictions, give me a like, give me a subscribe, give me a follow, because this is what I want to do with you guys. I want to share this journey with you, what I'm looking at, and hear what you're looking at, and maybe we can meld our minds together and out predict all the rest of these fools out here, right? But so I want to cover a few other things here that are going to help us maybe in the intermediate term. So let's go into this. I was telling you, right, yesterday, Jamie Dimon came out and was talking about things he didn't understand. I told you he doesn't understand macroeconomics. But you know who does? Is people who work for him. Promise you, This Marko Kolanovic knows more about macroeconomics than Jamie Dimon. And they issued their statements on the same exact day. They're both JP Morgan people, right? But Marko Kolanovic, who works for Jamie Dimon, probably knows more about macroeconomics than Jamie Dimon. And what does Marko Kolanovic say? He says that the market will erase its year-to-date losses and finish the year flat, according to him. Let's go into the article. He reiterated his view in a note on Wednesday, the same day Jamie Dimon said that a hurricane is coming. We're all going to face disaster. Marko says that the U.S. will avoid a recession this year thanks to a strong U.S. consumer, a continued post-COVID economic reopening around the world, and the reopening of China's economy following stringent COVID-19 lockdowns. The big risk for markets, he says, is still the ongoing Russia-Ukraine conflict, which has roiled commodity markets and led to ongoing supply chain disruptions. But Kolanovic said he expects a settled solution to the conflict to materialize in the second half of the year. I don't necessarily agree with that. I think Putin is psycho, but if that's the case, much of the commodity pressure could ease, helping tame inflation. Also helping prop up the stock market is corporate buybacks, which are poised to hit a record annualized level of $12 trillion, according to Kolanovic. But investors remain concerned about the Federal Reserve's path toward tightening monetary policy as it kicks off its $9 trillion balance sheet reduction strategy today, or that was yesterday. Yet Kolanovic thinks that the potential headwind is already priced into the markets. I agree. The market has already priced in the 50 bip increase to rates that's coming this month, the 50 bips that's coming next month, and then we're going to see what happens after that. He said the market already absorbed and priced in the change in monetary policy and significant tightening of financial conditions as inflation peaked or is peaking now. And inflation is likely on the verge of peaking due to temporary and year-over-year comparable effects, which should give the Fed some breathing room to take a break in its interest rate hikes ahead of the U.S. midterm elections. One final boost to the stock market into year-end will be from retail investors. Retail buying that was last year funded with stimulus checks likely will not stop, as it now will be funded by job paychecks, which is also more sustainable. Kolonovic's bullish view on the stock market doesn't mean investors should indiscriminately buy the entire market. Instead, he advocates for investors to buy beaten down innovation stocks. How can you get more innovative than crypto? Rather than stocks that are perceived to provide protection during an economic recession. That's crypto's exact ballywick, right? Right there. Innovative, beaten down crypto, right? I'm gonna substitute crypto for stocks. While a recession, in JP Morgan's view, will not happen, these stocks that are trading near all-time high valuations are not a hedge for any scenario. If there is a recession, multiples will go down. And if there is no recession, there will be a rotation out of those stocks into higher beta, smaller capitalization market segments in both growth and value, he said. So there you go. I mean, besides his little snippet about the war in Ukraine, which he seems to think there'll be a settlement of some sort in the second half of the year, which I don't see, but hey, I could be wrong again. I haven't been yet. Find something I've said wrong in this channel, right? But I'm not an expert on Ukraine-Russia relations. But anyway, besides that, I'm in line with Kolanovic. And I told you yesterday what Jamie Dimon said. He didn't say anything. He said there's a hurricane out there, and I don't know how bad it is, and it might come ashore, and it might not, and I don't know. This guy, this Kolanovic, knows a lot more about what's going on in the macro environment than Jamie Dimon, I promise you. So that's that. So, right, one more thing I want to cover, because this has come out today, and this is kind of more intermediate term as well. And it relates to the Biden administration is crafting policy recommendations aimed at lessening the energy consumption and emissions footprint of Bitcoin and other proof-of-work cryptocurrencies, according to a report from Bloomberg. The publication said it spoke to the Principal Assistant Director for Energy for the White House Office of Science and Technology Policy, Costa Samaras, who offered some insight into the impending policy attempts. It's important, if this is going to be part of our financial system in any meaningful way, which I think everybody has agreed that it is, that it's developed responsibly and minimizes total emissions. Makes sense to me. This is what Samara said. And then he went on to say, when we think about digital assets, it has to be climate and energy it has to be climate and energy conversation, right? It makes sense. Regulators were tapped by President Biden's administration earlier this year in a whole of government approach to understanding and regulating the broader cryptocurrency space as Biden signed an executive order. The order set timeframes, mostly within the 120 to 180 day period, to publish reports in conjunction with other governing bodies intending to guide the administration through a largely misunderstood market. According to the report, the Energy Department, which issues many of the efficiency standards likely being discussed, did not provide comment on the matter of proof-of-work-based cryptocurrencies like Bitcoin. However, Samaras offered insight on the matter. He said, we need to think about what would be the appropriate policy responses under a world that shifted to proof-of-stake or a world that has some continuous mix of proof-of-work and proof-of-stake. Proof-of-work is energy-intensive by design, but it also increases security. A report geared towards uncovering emissions, noise pollution, energy efficiency for differing consensus mechanisms, and the possible revival of fossil fuel intensive mining methods is expected to be released this August, following the timeline of the aforementioned executive order. We've seen reports about noise, local pollution, older fossil generators being restarted in communities, he said. These are not trivial loads, okay? So, you're already seeing the FUD, the worry from the Bitcoin maxis, right? The Bitcoin maxis are freaking out already. And there's nothing in that says they're going to ban Bitcoin. I don't understand. You watch these Bitcoin maxis talk about how environmentally friendly Bitcoin is. It's a green revolution. It will lead the green revolution. Well, then you shouldn't have a problem with whatever Biden comes out with. If you truly believe that Bitcoin is so green, then you shouldn't have a problem with it. And to expect in a time where climate change is real, I'm sorry to my friends on the right, climate change is real, to expect no regulation on it, it's ridiculous. So quit whining. I don't think it's as bad as some of the fudders make it sound as far as Bitcoin's environmental impact. It's not as bad as, say, I told you I work for a bank, right? Think of all the banks across the world and their databases and their buildings that they're heating and cooling. And here in Phoenix, man, it probably costs an arm and a leg to cool all those banks. Well, putting it all in Bitcoin is a lot more energy conservative than relying on all the banks worldwide, right? So it's not as bad as the fudders like to make you think. But quit whining, Bitcoin maxis. Go with where the change is happening, right? If you truly believe Bitcoin is going to lead an energy revolution to greener technologies, then embrace it. Embrace the whatever comes out from the Biden administration and go with it, because I think that. So I'm not going to whine about something that I don't even know what's going to be in his policy. It is not legislation. I've heard on Twitter today that this is legislation. It is not legislation. It's going to come out and it's going to be guidelines. It's going to say, we need to work toward, right? Don't fall for the FUD. It's not legislation. It's going to be some sort of guideline that says, he's going to ask Congress to work toward making sure that crypto proof of work mining is done as environmentally responsible as possible, or whatever, something like that. This is not legislation. There's nothing going to come out in August that says you shall not use coal or whatever, right? So these Bitcoin maxis drive me up a wall, because they're spreading fear about what the administration is doing on one side of their mouth, and then on the other side they're saying, well, hey, Bitcoin is so green, we're really leading the green revolution. No, you're not. And quit whining about regulation that's trying to make you more green if you are so green. It drives me up a wall. But you know what is green? You know what is green? My favorite crypto, right? And here's my other prediction. Have I failed on a prediction yet? I told you that any new money invested in between Bitcoin, ADA, and Ethereum, you want to put new money in ADA first, today, starting today. ADA first, Ethereum second, Bitcoin third. Well, green ADA, soon to be green Ethereum, and not so green Bitcoin, right? Look at this. We've put $100 in each week in all three of these. And we've tracked it on my channel. We've tracked it on my Twitter. Follow me on Twitter at crypto_liberal. All right, we've put $100 into these 4 weeks in a row. Look at ADA, $411. That's the only one that's up. Bitcoin, $397. Lost a little money. ETH is kind of the laggard here, right? And I told you, despite the FUD, again, that you see on crypto Twitter, that investing right now in alts is you're going to get devastated because Bitcoin, the Bitcoin dominance is going to increase exponentially and you're going to lose all your money if you invest in ADA and Ethereum. That's not true. And I didn't even say it would be true, by today, right? I started doing this experiment, this hypothesis 4 weeks ago. And I told you your return in ADA will outperform Ethereum, and your return in ADA and Ethereum will outpace Bitcoin by the end of the year. And in a year from when we started, and 5 years from when we started. And what's happened? It hasn't even taken a year. Now, I'm not saying that they're not going to reverse because I haven't been telling you that it's going to happen now. I've been telling you by the end of the year. That's my prediction. So we'll see. But I know one thing. I'd rather have put that $400 into ADA than Bitcoin because I made money in ADA and I would have lost money in Bitcoin. And that's all fictional money that we're doing. It's an experiment. I put new money in every Friday. And I've been putting it into ADA pretty much exclusively. I dabble in a little bit of Ethereum. Ethereum is, like I said, is lagging. So I might have to, when I put new money in tomorrow, Friday's my day, I might put it into Ethereum just because it's lagging so much. But that's what I do. So, and ADA, there's one bullish thing I want to show you in ADA, right? So we've seen the Bitcoin chart. We're over 30,100. We're continuing to go up. 30,100 exactly, pretty much. Okay, but look at this ADA chart. This is it is so bullish. It's ADA compared to Bitcoin. And let's see here. I need the Coinbase chart. And I need the weekly chart. Now, this is weekly, right? I'm not trading on this on the 15-minute chart. Don't trade this the 15-minute chart. But look at this. I've never seen a more bullish chart. I'm sorry. This is just beautiful. Look at this descending wedge. Now, I've seen people on Twitter say, why would you invest in ADA? Look at all the money it lost against Bitcoin in the last, what is this? When was this? Since August of last year. It's just gotten crushed against Bitcoin, right? Yeah, it has. But I didn't tell you to invest in August of last year. Right? I didn't tell you that's the best time to invest. But I'm telling you right now what I'm doing. And you should do your own research and do your own financial advice. But I rarely see charts more bullish than this. A falling wedge after ADA just gotten crushed against Bitcoin. And it's starting to go up. And it could break this channel, this downward sloping trend line, right? This week it could break. I mean, it's bumping right up against it right now. So the rest of these next 4 days or whatever it is, it's going to be important. But if this breaks above, man, ADA is going to go on a tear against Bitcoin. So these people are telling you, well, you shouldn't put new money into ADA right now because look at all the money it lost against Bitcoin the last 6 months, 7, 8, 9 months, 10 months. That's not I'm not telling you to invest back here. Invest down here, right? This is where you want to put new money in when after it's gotten crushed. I just don't understand. Just because something it's happened for the last 7 months doesn't mean it's going to continue. Okay? So that's what I'm doing. So the big finish, right? Where are we going? I've kind of indicated, I think the rest of the week we're going to be green. And let's go back to the Bitcoin chart. Because I think that ADA chart is amazing. I love it. I love it. But the Bitcoin chart, okay? Expand this back out a little bit. See, you could see the descending wedge I think we're in, right? Oh, go back down. See that descending wedge? It's perfect. It's just so beautiful. It is so beautiful. You don't get this anywhere else on crypto Twitter and crypto YouTube. I'm telling you, you don't. Okay, so but kind of short term to longer term, where I think we're going here, right? So let's expand this back out a little bit. Oh, and we're got to get back to the daily. That helps a little bit. God, look at that. Look at that support line. How beautiful is that? How beautiful is that? Okay, so I think it's kind of important to regain this 31.3 level. And hopefully we can do that this week, maybe tomorrow. We'll see. But we need to close above 31.3. And then honestly, again, I'm trading on the daily and the weekly channel on charts. I don't trade 15-minute chart, hour chart, 4-hour chart even. So when you're trading the daily chart or the weekly chart, you're looking ahead weeks, if not months, right? So in my opinion, right, we need to reclaim 31.3. And if we do, I think the least we do is go to this 37,000 number. And not right away. It's not going to happen in a day, 4 days, a week, maybe even a month, maybe even 2 months. And there's going to be some chop around in here between 31.3 and 37. There's going to be some chop in there. And we're going to maybe go up to 34, back down to 32, and then up to 35, 4, and then down to 33. I mean, there's going to be chop in there, right? But the ultimate zone, I would say, is 37. And if we can surpass 37, I think the ultimate zone to look for is this descending level of resistance. And I've covered this in our previous channel. We'll cover it again in the future. Give me a like, subscribe, follow, hit the bell notification, right? Because we'll talk about this more, because this in the end is the ultimate resistance. And it's so perfect. It's so beautiful. It's just as beautiful as that 88 at that ADA chart I just showed you, how perfect this resistance line is. Ultimately, that's the resistance line we're going to need to break. And it's descending, you can see, right? So by the time we get up there, maybe it's at 42.7, which you can see at the blue line there, or maybe it's at 40 if we get all the way over here somewhere. But right now, I think the first thing you need to look for is, do we surpass 31.3 again? If we surpass 31.3, my next level of resistance is 37. And then after that, we're going to talk about it on my channel. And I hope you join me. I hope you join this journey, because I'm so pumped. I'm feeling better just talking about it, right? COVID, screw COVID. I'm so ready to get over this and get back into it. This just gang busters. Is that whatever? Anyway, so 31.3, then to 37 sometime, right? Not immediately. And then eventually that descending line. And I hope you follow me. I hope you subscribe and like this content, because we'll talk about it all the way up. But, and let's go back to the chart one more time. But I don't think we're going to go right now. I don't think we're going to go back down to revisit this descending line of support that we bounced off for 23 days or whatever it was, right? I think to me personally, we're going to go to 37, and there's a decision to be made there. Do we get rejected off of 37 and come back down and visit this support line, which could be down by that point at 25, 24? That's possible. That's possible. I don't necessarily think it's likely. I don't know. But the one thing I'll leave you with, because I've seen this all over, I've said this on my channel repeatedly. All over crypto Twitter, you're seeing people talk about 20K. We're going to the 200-week moving average. Bitcoin has always done that, so we have to do it again. Everybody is saying it. If you follow anybody else on crypto Twitter, they're saying that's where we're going, if not lower. So here's my thing, and I've said this repeatedly. If everybody is saying something, the big money will not let that happen. Because why do you think the big money is just going to let everybody else, regular Joe, buy in it, and their followers, right? I mean, think of these people that are saying it. They have thousands of followers. I don't. They have thousands of followers. Why would they let the big money let those people and their thousands of followers buy in at the exact point that they want, and then we're going to immediately go to 100K? That's what these people are telling you. That's not going to happen. There's one of two things that will happen. Either we don't go to 20, 21, 22K, because that's where everybody's expecting them to go, and we stay above it, and we move up. Or we do go to 20, 21, 22K, kind of stall out right there so everybody can buy in, and then the big money comes in and pounds the out of it, right? And sends it to 15K, 14K, 13K, 12K. And just so the people that were expecting it to, I'm going to buy in at 21K, and it's going to go to 100K, and I'm going to be rich and retire on the beach of Mazatlan. It's not going to happen. The big money will not let that happen. So there's two options, right? Stay above that range or get crushed way below it. Which do you think is more likely? Think about it. Which do you think is more likely? I'm of the opinion we're not going to visit that range. I'm of the opinion we're not going to that range. Now, that's my opinion.